All right, good morning, traders. TG Watkins here. How's everybody doing out there? So, just a reminder, we got the Orlando event coming up. We have the Simpler Summit, which is going to be Friday, Saturday this week, which is going to be fun. So, I leave actually Thursday to start heading over there. It's going to be a long flight coming all the way from Washington, and then a big time difference. So, yeah, that'll be a bit of an adjustment this weekend. And then we got the Money Show over there, and I'll be giving a presentation that Monday. And then we have a board panel with about 5 of us from Simpler on Tuesday. So we'll see if anybody actually gets dressed up for Halloween. It'll be kind of funny to be seeing a bunch of traders out there maybe dressed up. So hope everyone's going to have a good time out there and get your tickets, check out the recordings, and tune in. Thanks, Romero. Looks like we're good to go in the Moxie room as well. All right, so let's kind of dive into a couple things. The market just continues to be weak. I was looking for something a little bit of a drift up in through here to get up to the hourly 50. So far, that's not happening. And if we look at here, we can see over on stock charts, and we can look at the new highs, new lows. And one of the issues that we're seeing are that the new lows continue to rise. So that's not a great situation. At some point, I've been looking for new lows to kind of demonstrate a bottom right in through there. You can kind of see that when they tick up higher, that tends to be a bit of a washout. We have not seen that yet, even though we have been basically waving. We've been in a wave as the market continues lower. So it's been doing a fairly good job channel trading on its, well, let me see if I draw that one a little bit better, on its way down like that. And, I'm kind of looking at this and seeing if the argument can be made that we're starting to level out in through here, and maybe we'll find a base and then we can kind of move up. Either we're going to move up to the top of the range, or we can actually see something from the next wave, since we've been, going down for so long. If that doesn't happen, then basically what I would be looking at is the next bounce, then we just continue to go lower. So if we only get like a half size bounce, let me say that if we have this upper channel and we can't even make it up to that upper channel and then we continue lower, then I would imagine we're probably going to break through the lower side of the channel. So we do need to watch out for that. Of course, things can always get worse. The internals are pretty bearish, but they can always get worse. So that's always in the back of my mind. And then if we look over here at the breadth indicator, and again, we kind of when watching this, and as I said, typically, when the 20-day gets really low and washes out, we do tend to see bounces. And you can especially even see that even on this last one, we have been seeing bounces. So we are in an area where we would expect some sort of bounce. You can even see that here. The last two were really when the 20-day got washed out. The other argument that we could have is we could be looking at basically some divergence. So we have the 20-day SMA, the number of stocks over the 20-day SMA is higher than the market is. So we're starting to see some positive divergence. And the same thing is true here on the 50-day. Now it's very small, very minor, but it's something that could give you a little bit of a heads up. It's kind of the same way we saw negative divergence right here. We saw price moving up and you saw the 20-day just couldn't quite get up there. So divergences, you can see the same thing here. Price was going up, negative divergence there. And so that's what we're looking for, to see if there are any positive divergences in this case. Now, if that doesn't happen, if these positive divergences don't matter and the market continues to be heavy, then maybe this just oscillates down here and this continues to stay down here and the market just continues to move down. The other thing we'll be looking at is if you look at the 200-day, and you can see this thing has really just been dwindling for quite some time. So there is just no traction in this market as far as being able to get something to the upside. And as I showed earlier, we continue to see new lows continue to grow a bit on this stuff. So yeah, so it's just like, okay, it's almost hard to want to go short on some of these things because the internals, the market breadth market, put call ratio, the breadth, all those things are kind of pegged to the extremes. And so, yeah, it's tough to want to go short because I keep thinking about short squeezes. So if we kind of go a little bit around the handle, some of the other things that we've had, now we're into earnings season, and we had Netflix. Now, Netflix, my understanding is they moved up because their earnings were less bad. So, one of those things that we've kind of been seeing this year where, everyone, all the analysts have been preparing and factoring in really, really bad earnings because recession and rising interest rates and just expecting the consumer to dry up. Well, they haven't. And so a lot of the stocks that have actually been able to go up on earnings is basically because they did less bad than what the analysts projected. So that means good. Well, and I think Netflix follows that story. Now, fantastic if you were somehow long going into earnings, which I couldn't even imagine unless going long, except just to roll the dice. But if you were, this is about an area where I would take profits. And if you were long or trying to salvage something, this is another place that I would generally expect to be taking profits because the likelihood of Netflix starting to pull back is getting pretty high. We have Netflix up here like right at the third ATR. And remember, it's gone from the lower third ATR to the upper third ATR. It's most likely going to take a break and probably pull back. You can also see there's a giant gap here between price and the AEMA. It's just, basically, if you just look at this thing, these price bars are floating in the middle of air. They're up there. So where's their support? Well, it's definitely not when there's an air pocket right in through there. And we can kind of see that same air pocket here on the hourly chart. Now, at some point they'll break down, but they won't start until we see it show up on the 15-minute time frame. So whether you're interested in shorting it, maybe for a quick little pullback, okay, or if you're looking for a place to take off your long trades, it would be, I think, pretty darn soon, and it's going to be when it can break that 15-minute 50. Then we see the other two reports that we had Google and we had Microsoft. Bit of a mixed bag on that one. Google down, Microsoft up. So adding more fun to the earnings season type of confusion and all that kind of stuff. We kind of come in here. Now, Google, as far as the Moxie indicator and all that, it did give a bit of a heads up. Now, I make no claim that technical analysis can predict any earnings results. I mean, you just saw Netflix, it was going down, 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 and then it suddenly reversed. So there are occasions where the technicals will line up with earnings, but I just can't guarantee that or anything. And in this case, if we look at Google, it did kind of line up. You can see that the Moxie indicator had been trending down and pretty much was at or below zero as we were coming into earnings. So this one did make sense. This one did go and lined up with that. And as we look here, we did basically see price above the hourly 50, the Moxie indicator below zero. That's an inverse trampoline move. Now, again, I make no claims that this is something that you can rely on. I'm just showing you in this case, especially this daily chart, was telling us that, Google is likely to run out of steam, energy, and momentum. We could also see that it was kind of getting overbought and kind of up into prior resistance. I mean, look how perfect this was. You can see, we can do that again so that we get it clean. Look at this. You can see that there's a level right through here, and look at price. It just went right to that level. Okay, and so this is why it's important to know history and have your look at a higher time frame chart like the monthly time frame, because what did price do? It ran right up into the previous high, and that's just going to be natural resistance. In fact, I was just making a training module for our simpler essentials a couple weeks ago, and that was one of the things, talking about support resistance, price zones, congestion. You got to think about it that even if this was going to be fairly good, price is going to come up into here and it's going to have to navigate it before it can go higher just because of all of that price area. Now that's assuming it's going to be bullish and get through. If it's not, it's going to be weak. It's going to come up here, run into resistance, and start to fail, which I'd say that's more what it's doing right now. And you could also see that there was just a pretty big gap between price and the moving average, and so it's just got a little overbought. And now we can actually see that price is breaking the weekly 21, which means that the trend is starting to fade. It's starting to be over and not be very strong, because you can see here how it always held the 21 and now it's not. So definitely, I think I'd say a change of character for that. And then if we look at Microsoft, and we come over here and we look at the daily and hourly, this one was fairly good. It's actually been holding pretty well. Now, in through here, you could almost make the argument kind of a double bottom, something like that. And you can see the last time where price tried to get over the daily 50 and it just couldn't hold. This time it looked like it did. Look right there. You can see it got over the daily 50 and then came back down and actually tested, bounced off the daily 50. Now the Moxie indicator is not above zero, so this could later be a problem. Think inverse trampoline move. We'll have to see how that goes. But then also leading up into earnings on this one actually did work nicely, because what it do? Price below the 50, the Moxie indicator above zero. That is directly opposite of what Google was. Google was over the hourly 50 with the Moxie indicator below zero. That's an inverse trampoline move. This is a regular trampoline move. Price was below the 50. The Moxie indicator was above zero. It bounced off the 200. It was a regular trampoline move. And it bounced off the daily 50s. So these technicals actually lined up perfectly with earnings. So just want to show you that in this case, they actually worked out quite cleanly. But no way that I could be looking at these and trading these or anything else like that. I just don't do that for earnings. Anyway, where'd it go? Well, it got outside of the 30 ATR and went exactly to the 30 ATR and pretty much right to the previous high. Again, where's that resistance? Support and resistance zone, pretty much like that. Now, in a very similar fashion to Google, you can see Microsoft also got very overbought over the last few months. And so in a more constructive fashion, what has Microsoft been doing? It's actually been flagging sideways. Now, it does look fairly bullish. I'd have to say at this point, this is looking kind of good. You can see price actually coming into the monthly 10, coming into the weekly 30, flagging sideways. You still have the 8 over the 21. Like, everything here still says bullish. So until it changes, I would be leaning to the bullish side. But we'll have to make sure that it actually stays that way. Google, on the other hand, as you come over here, not looking so bullish, not yet at least. It still, if it's going to do anything like what Microsoft did, it still has room and time to flag sideways until it finds that support. So in a best case scenario, it's going to kind of chop and flag sideways until it goes higher, or it's going to chop and flag sideways until it goes lower. And then I think the other one we can look at, Meta. Meta's kind of doing the same, chilling out. I would not typically expect this one to go higher. It is also right here into its previous high, previous resistance area. And then you can see here that there is a big gap between price and the monthly 10. And so far it is holding the weekly 21, but I am kind of looking near term at this double top right there. Kind of wondering if that's going to be an issue. So Meta has earnings coming up, I think, in the next, this afternoon. So right in succession. I think, of course, Apple's coming up next too. And this is going to be an interesting one. We'll have to see if the technicals line up with earnings. Again, I make no predictions of that. And you can see here price getting rejected by the hourly 50, the Moxie indicator below zero, so negative. And this looks like it is a pretty official inverse trampoline move. Now, anything can happen on earnings. Maybe there's a surprise and it's good stuff and it jumps up, or whatever, and it goes down. So it'll be interesting to see if the technicals line up with earnings this time for Meta. Let's see. Let me look at if I can time them correctly. There you go, Apple. And Apple also, now it definitely made new highs, but look what it did too. You see how it got very far away from the monthly 10 SMA, and so what it do started to come back down. And you can see, huge gap here, and it's basically kind of just been pulling back. Now, it seems orderly. This seems actually fairly constructive about a nice little pullback and finding some support, and then we'll see if we can actually keep going back up. But, there's no answers to that yet, and we have earnings coming up. And you can see that so far there's been no, other than a couple pops, there's been no actual bullish setup. I am aware that there are double bottoms like this and prices coming into larger time frame moving averages, but it just hasn't happened yet. I mean, look at this. You can see that price is still below the hourly 50. The Moxie indicator is still below zero. And it just hasn't changed trend. The last time that we saw that was right here, where we got the 8 over the 21, price past the 50, the Moxie indicator fired, and heck, we even had divergence going into that. You can see here, price down, Moxie indicator level, maybe slightly up. There's your divergence. And then we got that price trigger right there. So that was pretty good, right on time. You could even see the last one too. You can see price down, Moxie indicator up. There was your divergence. There's your Moxie price trigger as price pulled back into the hourly 50, and that was your next move up. So do we see anything right there? No, nothing yet. No setups. Now, maybe there's a little bit of divergence, but nothing's triggered. The Moxie indicator is not green. The hourly 8 is still below the 21. Price is still below the 50. It's still got work to do. And then again, we have earnings coming up. So who knows what it's going to actually set up like going into that. Beyond that, the markets just still continue to be weak. It's been interesting to see that retail has been doing well. Um, Abercrombie and Fitch, like, wow, like, why? Why is Abercrombie and Fitch doing so well? No idea, but it's been up there. Nothing to do with it now. It's very extended, overbought, all that kind of stuff. And then what was the other one? Gap GPS. I've been watching this one. Very surprised to see this one almost straight up like this. And not only that, it is going beyond the channel. That is definitely something I would not have expected, because you can see so far it's been doing a pretty good job going back and forth, ebbing and flowing between these channels. And it looked like it was maybe going to do one more, and but instead it jumped up. And from the hourly perspective, it wasn't. This was actually pretty accurate. It came in, it dipped just below the hourly 50, which is a trampoline move, and then it shot right back up. So I don't know. Maybe there was some news that kind of came out with this, but that was the situation there. Very surprising. You could see that, considering, I don't know, inflation or costs, or everything we kind of hear about economic wise, to have something like Gap and Abercrombie and Fitch straight up. And then yeah, just kind of interesting to see through those few things. Let's see. Let's take a look at the dollar real quick, because this is kind of another area. This one has been actually following and doing what I've been expecting it to, which means that since it's hit its third ATR up here to basically chill out, because it needed to get closer to its daily 50. And you can see we've had a pretty perfect inverse trampoline move. Price should not be over the 50 if the Moxie indicator is below 0, and that's been working out very, very nicely. But now it's pretty much tapped the daily 50. So I'm curious to see if this is just going to flag into the daily 50 and continue up, or if it's going to flag into the 50 and find out that it's not strength and continue to go down. I'll show you one thing before I sign off. If you look at Payo, you can see this. If we were to look at the dollar, and you're trying to figure out if the dollar is going to, in fact, bounce off of the daily 50 or not, doesn't Payo look almost exactly like what the dollar is doing? So you can see it got kind of overbought here, pretty far away from the daily 50. And what it do? It came down and started to bounce along the daily 50. And if you didn't have any other tools, you would think, oh, that looks great. It's holding the daily 50 and we should get it to go up. But instead, what it do? It cut through the daily 50, and now it looks like it's down. It looks like it's going to go down. Now, how would we have known that that was going to happen before it happened? Well, if you look over at the hourly chart, this is the key. Notice that price multiple times was trying to get over the hourly 50, but notice that the Moxie indicator was below 0 the entire time. So that, number one, told you that there was never a bullish setup. It never held, hourly never held, and the Moxie indicator always stayed below 0. And so if you go back and you look at the dollar, and so the question is price going to bounce off the daily 50 or not? Well, until we get a signal, because notice price keeps trying to get over the hourly 50, but it can't hold. Look at the hourly Moxie indicator. It's below 0. It's staying below 0. It's pretty far below 0. So until this changes, until price can actually, or the Moxie indicator can get over 0, and price can actually engage with the upper moving averages, I would put the risk to the downside, saying that maybe eventually it's just going to do this, and then it could impact the 50 and then start to fall through it. So keep watching this. It's the hourly chart is the key when we're trying to figure out what the daily is going to do. And going back to Payo, the Moxie indicator did a great job of telling you that it was not going to hold. And you could just see, right and through here, it's still never got over 0. And then right there, failed the daily 50. So I'll be keeping up on this. I'll be watching it for you guys. We'll be probably mentioning it over the next few weeks, just as the saga continues. And we'll see how that thing works, and if it goes the same way, or if it gives some bullish signals and somehow the hourly Moxie indicator is able to regain itself and price is able to hold the hourly 50. All right, guys. Well, thanks for your time. We've got the Orlando stuff going on, so if you guys are signed up for that, be sure to come over, say hi, probably tell me your screen name, because that way we can put a screen name to a face. And otherwise, enjoy the rest of your week, and we'll see you guys later. Take care.